G'day guys, welcome back to the Devon Too Good Investing channel. Today we're going to be looking into Dropbox and I'm going to be giving you guys a price prediction of what I think Dropbox stock can achieve by the end of 2024. So the first thing that strikes me about Dropbox is their big audacious goal that the company's management team have. So Dropbox's management team, they're looking to hit 28 to 30% non-GAAP operating margins. They're also looking to hit that $1 billion in free cash flow by the end of 2024. And at the same time, they're going to be aggressively buying back shares via share buybacks. And how Dropbox are going to achieve this $1 billion in free cash flow is that they're going to be reducing costs in their business, which is going to lead to margin expansion. And at the same time, they're still going to be growing their user base and their ARPU. So this is going to lead to more revenue from the top line, flowing all the way down to the bottom line and thus being transferred into free cash flow. And not only that, I've got 6 points in front of us here that outline my bullish thesis. So Dropbox, they have consistent recurring revenue. They also have revenue that is very sticky. So once Dropbox users join the platform, they are very unlikely to leave. They have low churn rates, and that goes hand in hand with them being a essential business, which is my second point, as 80% of Dropbox users use it for work. We're also going to see margin expansion through growing ARPU and decreased cost reductions, and we see that by the whole Dropbox, all the Dropbox employees starting to work from home, and the company are going to be able to save on costs due to that. We can also see that my bullish thesis revolves around growing pay user growth and growing ARPU, which has had a consistent history of growing. They also have minimal customer concentration. So if they lose a key customer, it won't hurt them. And based on these points here, we can expect $1 billion in free cash flow by 2024, where as of a few weeks ago, the company was trading at roughly, it's about $12 billion right now. Another real nice thing about Dropbox is that they've got a huge customer base. They've got 700 million plus registered users, and then they've got 16.14 million paying users. Now, if Dropbox can just transfer just a small percentage of this total user base into paying users, this company is going to be able to keep growing their revenue at double digits year on year, very far into the future. I see roughly maybe high single digit revenue growth or possibly low double digit revenue growth out until the end of the decade here. Dropbox also isn't just a cloud company. They're building a whole suite of products, including HelloSign and DocSend. So HelloSign is for the e-signing of documents. I suppose you could call it a competitor to DocuSign, even though they're well ahead. But HelloSign could be potentially the number 2 player in e-signing of documents. Then you've also got DocSend, which removes friction in pretty much sharing documents. And both of these products are more expensive for users than the cloud products. So as more users transfer into HelloSign and DocSend, it's going to increase the margins because the ARPU of these products are higher. It also is going to help make the products more stickier because they're building out an ecosystem, and once people get used to these products and how they sort of seamlessly integrate together, it almost builds a bit of an ecosystem, and you could almost call it a moat. And I think this slide here is really critical because one of the key sort of arguments against Dropbox is that they're going up against Amazon with their AWS and then Microsoft with their products. But the thing about Dropbox is that it's an open ecosystem. So Dropbox can seamlessly integrate with all these other sort of software services, whereas Microsoft and Amazon, they're a closed ecosystem. You could almost call them a walled garden, as Dropbox describes them, where you can't, your Microsoft and Amazon cloud services, they don't seamlessly integrate with other sort of products outside the ecosystem, whereas Dropbox does. We can see here that they're aiming for revenue of $2.139 billion by the end of 2021. They're also aiming for $720 million in free cash flow. And you can see they've already hit their 2024 gross margin target of 80%. But they've also got an operating margin of 28.8%, which is also increased a lot since 2020. This is mainly because of decreased expenses, mainly to do with administration costs and that sort of thing, because they have decreased their total office space as now their employees are working from home. We can also see that ARR is growing quite consistently over time, and as long as their paying users keep growing over time, the ARR will also keep growing over time. And what's also quite nice is that ARPU is consistently growing year after year. And I expect it to continue to keep growing year after year because of their new suite of products, including HelloSign and DocSend. As I said before, these products have greater margins. Thus, it's going to keep driving up this ARPU, which is also going to flow into our ARR. And finally, we can't forget about the share buyback program they've got going. So during the 3 and 6 months ended June 30, 2021, the company repurchased and subsequently retired 5.5 million and 24.1 million shares of its A-class common stock for an aggregate amount of 150.8 million and 582.7 million respectively. The company also announced that they're going to be able to repurchase an additional $1 billion of the company's outstanding shares, which of course I'm going to factor into my valuation when I show you my price prediction coming up next. So this here is my valuation of Dropbox. In these boxes here that I just highlighted, that is 2020's free cash flow. And then in the second box here, I've hard locked in management's guidance for 2021 of 720 million of free cash flow. And then I've grown it out over the next 5 years based off these growth rates here. And I've entered the growth rates to make sure that I reach that $1 billion in free cash flow by 2024. I'm pretty confident that the management will be able to achieve this. So I've taken Model 3 and I've entered it down here for our 2024 free cash flow. And if we apply a free cash flow multiple of 20 and then shares outstanding in 2024, so pretty much this is taking into account share buybacks. I'm pretty sure the shares outstanding right now is about 400 million, but we've entered 376 for 2024. This gives us a share price in 2024 of $55. Now, I believe the stock right now is at about $30. So I think based off the stock price right now, you can expect about a 18% return, I believe. However, if you want that fat 22% return, you're probably going to have to wait for the shares to drop back down to $26.50 if you want to initiate a position. However, who knows? We might not get back down there ever again, but that's up to you to decide. Anyway, guys, that's my price prediction for Dropbox. I think it's going to reach $55 per share by 2024. Hope you enjoyed this video and thank you for watching. Make sure you like and subscribe. Bye.